All right, so it's been a while now since I first released my short thesis. It is a 51-page PDF that essentially goes over the reasoning why I think the market is going to crash. And the reason why I made that was because I've been talking about this since about June. Really, I've been talking about this since as far as like online origins that you could actually find, I was talking about it back in probably like December and November, and then a lot more publicly February and March and January. I was talking a lot about how I thought that we would have a blow off top rally to start the year. I thought there would be meme stock rallies. GameStop would rally with AMC and all those names. And it worked out kind of, but it wasn't perfect. I was thinking it would happen around the end of March into early April, and that is not what happened. Instead, the market crashed at that point, or really just pulled back, and we didn't get any of the stuff that I thought we would get. But of course, it came in the very next quarter. GameStop rallied, Chewy, AMC, they all had the big short squeezes, and so far, that's looking like that did mark the top on the NASDAQ, or at least it was the end of a major uptrend that led to a huge correction, fell like over 10% in a couple weeks, and it's bounced back. And there's a lot of talk about Japan and the VIX and all the things that occurred with the crazy VIX spike and the carry trade and all these things. So I thought it would be good to do an update. And like I said, I decided to do all of this because nobody seems to agree with me. Everybody seems to be super bullish and does not understand why I'm bearish. And I'm obviously completely opposite. I do not understand why anybody would be bullish right now. How in the world you could possibly think that this market is going to go up? I think this is uh, pretty much the easiest top signal in the history of the market. Really, top picking is usually not easy. Trend fighting is usually a fool's game, and I don't do it often. And I really don't want to promote it either, but I think this is a really good learning opportunity of how to spot a major trend change and distribution and sort of how these sorts of things play out with the rate cuts. So that's a big thing. The Fed is going to cut rates, and the market, a lot of people are pushing this as bullish, as if they've never read a book before in their entire lives. They've never seen the history of the stock market or the Fed, how prices react when the Fed cuts rates after a long hiking cycle. It is not bullish. Apparently, they've never heard of the inverted yield curve that everybody's freaking out about, or at least they were a year ago. Now nobody seems to care now that it is actually the longest yield curve inversion in history, and now I think it's no longer inverted, which means it's recession time. As far as literally every single time it's ever happened, the market has never not sold off after that. We've never not had a recession after that happens. Every single time the Fed cuts rates, we have rallies, we have inflation. Then they begin to hike the rates, and the economy goes into a downturn. But it's kind of unknown for a while, and then after that, the economy begins to weaken quite substantially. Which at that point, the Fed takes that as a signal for them to begin easing policy again and cutting rates. But the economy is already destroyed, and it's over. They killed the economy with the inflation and the higher rates, and now they're going to lower them, and that means pain for Americans, is what it means. It means the bubble is finally coming to an end, and the bull market is over, and this is like a 15-year stretch, all the way from the bottom of the financial crisis till now, and then you could also say from the COVID low till now. It's been just a massive rally, pretty much all based on money printing and Fed intervention, and it's just all propped up. It's a giant house of cards, and it's just built on debt and short squeezes and VIX manipulation, VIX suppression. That's what I think. That's the gist of the short thesis, and I think it's still super valid. And so we've got this major pattern here as far as the charts go. This is the uptrend from 2023 on ES. It's a 4 hour, and you can see that We did have the massive break below and the huge sell-off, but instant recovery came all the way back up here for a retest of this trend, and I thought it would fail right on the line, but it did not quite do that. It's basically sitting right on top of it now. I have the supply zone here, so this is kind of my make or break area. I mean, ES is almost already back to all-time high, basically erased the entire sell-off. And that's another thing that people are saying it's bullish because this thing has recovered instantly and it's just going to keep going. And I would agree that a lot of the times major bottoms do look like this, where you have a big dump and then a V-shaped recovery, and then it continues even higher. I can't really argue with that. It does sort of have that look. However, I just see this as volatility, which is not what you want to see near the all-time high like this. And obviously, we did have the massive VIX spike that has been erased, and the carry trade and all that, and that's kind of makes sense that we'd have the big sell-off and then recovery. But I don't think it's over here. I think the damage from the carry trade is not over. I think it's going to get worse. I think just having this sort of whipsaw action of down, I mean, what was that, 600 points down and straight back up in like a week, 2 weeks basically. That is a sign of a strong bounce, but also a sign of volatility and indecision. And usually, whenever you get that leads to a major top. So we'll see. We'll see if we can just continue ripping endlessly, and it's like 1995 or not, and VIX just keeps getting crushed. But I think this is potentially the end. I think this might be the high that the last all-time high at S&P sees for several years. Honestly, maybe even like 5 to 10 years. We'll just have to see, but for me, it's make or break on this line, 5,600. So for like the short term on ES here, if it doesn't break the supply zone, I'm still going to be bearish. But if it does break above and continues back towards all-time high, and VIX keeps going lower, I'm going to have to be bullish until further notice. Very similar to June, because I was bearish back here in early June, and then we had the big rally, and then instantly it got erased. So my timing was off, but eventually the sell-off did come, and I think that's what's going to happen again. And I don't think that really this has reclaimed the trend. I don't think what it's done so far has really proven itself at all. It's sitting right on the trend still, essentially, and right in supply. So I think this is make or break. Could go either way, but we'll just have to see. So now I want to talk about the yen. So the yen was originally a big part of my short thesis. I still think it's important, and I still think it paints a picture of what's going on, but I don't think I was actually correct about the fact that the yen would end up collapsing and causing the global recession that I have been expecting, which is kind of funny because I originally expected the yen to collapse and die and kill the global economy that way. But what ended up happening actually was the yen started strengthening because of accelerated rate cuts, and all the short traders on the yen got absolutely destroyed, and they were forced into volatility, and that's sort of what set things into motion as far as that big crash went a couple of weeks ago, where the Nasdaq went over -6% on the session. And I believe Japan had -13%. I think it had a -7% day and a -13% day, if I'm not mistaken. I think the -13% day was the worst day since 1987 that it had ever had, which is interesting because that's what I've been talking about a lot too, was the 1987 move, which was right around this 160 level that you can see we went straight up to and rejected. This is the dollar versus the yen. So whenever it goes down, that means the yen is strengthening. And there was some really critical resistance here from all the way back from 1987 at this 160 level. And we can see it got the hard rejection. So it had a bullish pennant, had the breakout, but as we know with trends, this was a shorter term trend. It was from September of 22 all the way until April 24. So that is several years. That's a super long trend, and you can see we got a big move once we did break that level. I think we even came back for a perfect retest, didn't we? Yeah, I didn't even see that. So we broke out of this pennant, failed perfectly at 160, perfect retest and bounce, went for another try. Looked like we would break it here. and then just complete collapse because the shorts got absolutely destroyed after it started to look like interest rates were going to be cut more than people had originally thought, or at least faster. So I was surprised by that as well. I did not think a big part of the original thesis was that we'd have another round of high inflation, which I think we still could. There are some Fed speakers that are saying they don't want to cut this year. But I think that's toast. I think they have to cut now. It's too obvious that the labor market is just completely dying, along with the economy in general. So I don't think they're gonna be able to hold off the cuts. But it will be interesting if inflation does come back again like it did in the '70s, because it also had a very similar path where it cooled off and then eventually became much stronger again. And that's what I thought would happen. I thought interest rates would go up or stay elevated. I thought treasury yields would end up destroying the yen, but it's looking like the yen is safe for now. However, the Japanese economy is not safe. They did have the big recovery after that 13% drop, but overall, they've been in big trouble for a long time. It's just a ticking time bomb. Like, I mean, this chart has been going on for such a long time now, and if we can even zoom out all the way back to that 1987 day where it was back at 160, just so you can see. And you can see that this was a downtrend all the way back then that was broken in 2014. Had a little fake out back below, but has been holding it ever since. And then in 2020, things really took off, and it almost collapsed completely in 22, but they were able to save it for a little while before it came back this year. But now it looks like they might be safe again. So we'll have to keep an eye on that. But I'm not sure that the yen is going to collapse in the same manner that I thought. Although I do think the Japanese economy is headed for some big trouble. So we'll see how this turns out. But this is also still just such a nice chart, like a 20-year breakout here that just skyrocketed all the way back to the 1987 high and then just failed. Hard rejection. So. Excellent work for TA. I did have the green arrow here if it broke, but it did not. So again, I can't tell you if it's going to break up or down, but obviously very important area. What's going to happen? It fell $15. So you got to be aware of these areas, and we'll see what happens from here. But for now, I am more focused on other things for what actually might cause another big sell-off that doesn't get immediately bought up this time. So in addition to the yen, I think the dollar is important. It's going to have a very similar path. It's going to inverse what the yen does. So again, this was a big part of the original thesis. I thought the dollar would break out and put a lot of pressure on U.S. equities because of rising treasury yields, and I thought that would also put a lot of pressure on all the other currencies, like the yen and the won and all kind. There's several currencies in trouble, and that's why I thought if interest rates kept going up or stayed elevated for much longer, that would lead to a collapse on a lot of those currencies. So we'll see what happens. But so far, as long as we lower rates, I think that is less likely. But this is still an interesting chart for the dollar. We have a lot going on with the dollar. A lot of the countries are adopting Bitcoin and gold and other things to trade with and use as reserve currencies. I believe the U.S. dollar is dying out, and that was a big part of the thesis as well, is that eventually the U.S. dollar would collapse because of not only the yen, but also all of these countries moving off of the U.S. dollar and into gold and cryptocurrencies and doing trade on their own without us. Countries are becoming less and less reliant on the U.S. dollar, which makes me think that it is eventually going to collapse. And really the only way for the U.S. to maintain power in the world is with war at this point, if you ask me. And I think it's inevitable, and that's another big part of the thesis that I'll get to in a second. But just to look at the dollar chart, so this range is just super well established from early 23 all the way until now. It had a fake out above a couple times and below, but 105 to 100, it's just been stuck here forever, ever since it dropped from the big rally in 22. But it's above this trend line. It's still broken out. It did stall here at 106, could not take out this high from 23, but it's still above 100 and still yet to retest this trend line. So maybe it bounces soon. We'll have to see. I would expect it to at this $100 level, because if it gives us up, it's probably going to sell off quite a bit. So We'll see what happens there. I'm honestly not sure what that means for equities. I'm kind of confused, honestly, with I think everybody is with rate cuts, with all the stuff going on with the dollar and Bitcoin and gold and everything, and all the oil reserves and all these countries getting off the petrodollar and just it's really hard to call. It's hard to say what the market's going to do in the short term. It's very volatile, which again I think is a sign of the end is near, and that's also part of the big thesis is that we're about to see a huge increase of volatility, and we already have. So for now, though, the dollar is just stuck in this range. Also very confused about the Bitcoin, about Bitcoin because I want to be bullish on it. I think it's possible the world's just going to go over to cryptocurrency and this thing's just going to go up exponentially forever. I think it's a good long-term investment anyway, but I'm not sure what's going to happen if the Nasdaq sells off. And like, is this thing finally going to decouple from the Nasdaq and be its own ticker, or is it just going to be a glorified tech stock like it's been for years now? At least that's what I consider it to be. It's got this giant bull flag that it's sitting smack in the middle of, right around the 60K area. We have major support around 50K and then major resistance all the way up here around 70K. 63K is like the first target, but for me, I mean, Bitcoin, you always got to zoom out because of how volatile it can be and how insignificant some of the large moves are because they get reversed very easily. So what I see right now is just no trade smack in the middle of the bull flag. Just got to wait to see if it can break below 50K or break back above like 70K for a new all-time high essentially because I think whatever direction it chooses, it's going to be a big move either way. And it's very possible this thing just goes up exponentially from here. I'm just not convinced. I'm not sure what's going to happen. Especially, we have an election coming up with some different policy proposals. So there's really no telling where things are headed with the dollar and Bitcoin and everything else. So it's a tough call. So important to keep watch just to see how things are going along. But this is another part of the short thesis that, I'm not sure the dollar is actually going to explode and kill all the other currencies or not. Either way, I still think it's not good overall. So one last catalyst to discuss that I think is actually going to be the catalyst. So I've had a lot of them before. I thought it was the yen. The yen did actually cause damn near a circuit breaker, but I don't think that is necessarily going to be the catalyst, although I think Japan's economy could potentially be one. So maybe that's still on the table, and I think it's going to be a lot of things at once. So maybe it's everything. I don't know. But for the final reason that I think is actually going to happen right now is the war. I think either World War III potentially. I don't know what we're going to call it or what's going to happen. Who all the players are, but I think the United States is probably going to be fighting a war on multiple fronts. I mean, like I was talking about in the previous section about countries getting off the U.S. dollar and the U.S. dollar having no value to any of them anymore, which makes the U.S. A lot more irrelevant for their trade deals and their financial independence and success, which is a huge threat to the United States of being the world power. So we're gonna have, I'm sure we're gonna respond to that. As of now, we're acting like it's no big deal as far as the statements the Fed's making about all the countries leaving the dollar as the reserve currency. But I think eventually it's going to be China versus the United States as far as like both economic powers. I think they're going to have wars over economics essentially, and potentially Taiwan, of course. And then you've got NATO versus Russia. You've got the Middle East. You've got Israel, Iran. You've got Iran, Russia, and China are all sort of making this pact. There's a lot of other countries that are making the same pact as they switch over to crypto and gold and make all these deals together. And then you've got NATO pushing the issue with Russia. Russia's also potentially starting new aggression in other places. There's all kinds of talks about nukes. We had Lebanon lose their power. The entire country got shut down. The United States sent 1/3 of its navy over there now, I think, at this point, all the way to just to protect Israel from a potential strike from Iran, or potentially help them launch a preemptive strike. I mean, I can sit here and speculate. I'm not a foreign policy expert or anything like that. I know how to read the news and sentiment and things like that, and it works for more than just the stock market. It's not just the stock market, but um, what I'm seeing in the news right now is just that this is real stuff. Like, we had the Iran bombing in April, and the market sold off for like 2 or 3 hours or whatever, and then just instantly bounced because Iran didn't really blow anything up or cause any serious damage, so there was going to be no retaliation from Israel, and there wasn't. But what we're seeing now is we're seeing intelligence agencies across the globe evacuating all areas. American Airlines just suspended all of their flights to and from Israel until 2025. Like I said, all the intelligence agencies are evacuating their citizens and their ambassadors from all these areas in the Middle East and even around Russia and other parts of Europe. Um, we've got armies mobilizing on the border of Ukraine. I believe Belarus is doing that. Like, once again, I can sit here and talk about the news. There's tons of reports. Some of them are fake, some of them are real, some of them are just honest mistakes because there's so much different news going on right now. We've been hearing about peace talks between Israel and Hamas and all that stuff, but then it looks like as of now the ceasefire talks are off, and things are back on. And um, like I said, difference between just, usual news and FUD and people just talking about stuff that makes people scared. It's more of like real sources of, okay, we're actually lining up, we're putting on the gloves here. We're mobilizing. All these armies are mobilizing. They're getting ready. And it's Germany, it's Ukraine. I don't know. I mean, I just see armies mobilizing across the globe. It just seems like the calm before the storm. There's not enough people talking about it, I don't think. Of course, it's in the news a ton, but I don't know. I just think that this is it as far as this real major conflict that's going to arise as there's a power struggle for who controls the reserve currency of the globe. Is it going to be the U.S. dollar in the United States, or is it going to be somebody else like China with Bitcoin and gold? I don't know. I don't think anybody really knows, but I think there is going to be a big power struggle for it, and I think anybody who thinks otherwise is mistaken. I'm not trying to spread FUD and talk about war fears for no reason. I think they're very legitimate. We're actually at war with Russia and Ukraine already, and also in the Middle East. So lots of skeptics will just say, well, there's not going to be any war. It's easy to write it off because it's most likely that there's not going to be war, because usually people like to avoid conflict, especially nuclear conflict, which, yeah, I mean, that's just Pandora's box if something like that ever happens. And there's already discussions about tactical nukes being used and nuclear plants being blown up and things like that. So it just seems like it's all getting out of control and it's spiraling like crazy. And like I said, I don't want to speculate. I could talk about all these reasons, but why do I think it's actually possible, regardless of whatever stuff I'm rambling about right now, is because of the distribution and the fact that I think price precedes news. So I think that a big reason why I believe there's going to be war is because the stock market told me so. And that might sound stupid. You may think I'm a conspiracy theorist, like I've already tried to explain. If you know how the market works, wholesalers compete against retail. It's their job to dump their stocks on retail at the tops, and I believe that's what they've done. Like I said, exit liquidity rallies all over the place. These crazy moves up with no volume, increased volatility. All these things are signs that this massive bull run from 2008 is coming to an end, and I believe somebody out there knows it, obviously, and they have been selling for a long time now in preparation of the absolute chaos that the world is about to erupt into. I hope I'm wrong, but once again, it doesn't matter what anyone says. Lots of people talk about this thesis to me and they say, oh, well, it looks like Japan's recovering, or people are fine. Nobody's losing their homes, or whatever nonsense they say, or they talk about how AI is going to save us, or the Fed's going to do emergency cuts and stimulate us. And And I'm just saying, look, guys. Number one, a lot of the major trends are broken, the uptrends. The semiconductor bubble has popped. I posted an idea on TradingView about that before it happened, and people are still not fully on board. But hey, I get it. But um, trends are broken. They've sold all their stocks. Retail is left holding the biggest bag of excrement ever assembled. I truly believe that, and I think it is going to be a very, very painful road ahead. I don't know. It could be war, pandemics, monkeypox, what have you. I don't know. Alien invasion. I really don't. It could be anything, but there's something going to happen. I think at this point, I'm almost convinced it's war. Um, but there's a global disaster coming, and I know this because the stock market told me so, because the people that have all of the money in the world, that know everything that happens before it happens, they have sold their stocks. That is all I'm trying to do, and that is what I'm trying to prove to you guys and show everybody how you can see this, and you can you can tell what's going to happen in the world based on the stock market. They knew about 9/11, they knew about 2008, they knew about 2020, they knew about Russia and Ukraine. Obviously, they knew about 2008 and just, I mean, everything that's ever happened. They know beforehand. There's no such thing as a black swan because somebody always knows. It's never truly an unanticipated event unless, like, maybe a meteor is going to hit us or something, or aliens will invade. But I think even then there would be somebody who would know about it and would sell their stocks. So that's what I think. That's why I believe this. So if you have any questions for me about why you think the economy will be fine, or why you think stocks aren't overvalued or whatever. I really don't care, quite frankly. That's not why I think prices move. I don't care about any of that nonsense. All I care about is trends, wholesale versus retail, and accumulation and distribution. So if I'm right, and this is the end of a 15-year cycle from 2008, and they're just now offloading everything since February that they have accumulated since then, I think we're in big trouble. So we'll see how it goes.